Greetings everyone, Zagatech. Today is monster candle wicks. Alright, in the previous video I've talked about monster candle, right? Then this time around is monster candle wicks. So a monster candle wicks often leaves what? A long wicks behind. It's either on the support area or on the resistance area. So when this happens, the wicks will usually define as what? As a range in the market. It usually becomes a border between a support or it appears on the support area or resistance area. So market tends to range between those areas. So the market will not move beyond what the wicks, and it becomes what we call range bound, using the end of the wicks as its outer limits. So in that sense, we'll have a support area, we'll also have a resistance area. So these wicks, these long monster wicks, will form that monster wicks, and market will hardly push over the wicks. We'll call it breakout, either on the support area or on the resistance area. So in this kind of monster candle wicks, the market will get caught, thereby making the market to range. And this range means that there isn't much room for the market to continue, right? So staying out of this kind of trade or this kind of candle or this kind of range is quite good. It's quite a good idea, and you have to get yourself or relax for the market to break out on that zone before you can be able to push into a trade. So take a look at this picture below. You see that this is called a bearish monster candle wicks, right? What happens here? This is a momentum of downtrend. Market's going bearish downwards. So now we have this monster candle, and it now pulled back. The buyers now pulled back, but the bull people are not. The buyers are not much in the market. So it now forms just almost like a half of the candle, if I half of the long wicks, right? So the wicks here is there now. The market will now begin to range, to bounce on this area, right? It will not break this area. To use this area as as a support zone. So the market will come down, bounce, and keep bouncing and keep bouncing. It can even go up again, or it can even break out, right? It can break out and retest and continue. So this is what we call a bearish monster candle wicks, right? Now on the right hand side, you see what we call a bullish monster candle. So we have a bullish trend, market being bullish. So when the market is going upward, then the sellers came in, but they weren't strong, right? Now when they formed this kind of wicks, now when the market next candle begin to close, it will find it difficult to break out this area. So when they find it difficult to break out this area, market will begin to range bound on this area, to range bound, right? So it will be very difficult for market to break this area. So market will come back and bounce, So we don't find it, or we don't usually enter such trade because of that ranging pattern. That's what people call ranging in the market. So market begin to range. But when you sense this kind of big monster candle wicks, because monster candle is when it is full, but the wicks is when it's halfway and it's being leave, and it will leave a wicks behind it, right? So I will show you guys this on our actual chart so you'll be able to understand what I mean by monster candle wicks. All right, here is an actual chart of monster candle wicks. When you take a look at the left hand side of this candle, you see a long monster candle. Do you see that? Now, as this now sold, the buyers entered, right, and started going bullish. Now it didn't pull back again. It stopped here. Now, when you take a look at all these candles, remember this is a daily time frame. Take a look. You don't use the daily. So even for day 1, day 2, day 3, day 4, day 5, day 6, the market begin to range, and it find it difficult to break out this area. And in my final video, I talked about these spikes, multiple spikes, simultaneous spikes that can lead to a bullish move, right? It's in my former lecture. You can check it out, my forex mentorship playlist. It is there. So you can see this market find it difficult to break out on this zone. So we'll call this a support zone. And when you see this on the higher time frame, 4 hours daily, you say that is a major zone where markets keep on bouncing and keep on rejecting. So here you said bearish monster candle, price remains above the low created by the wicks. So price keep remaining here and can find it difficult to break. Now by right hand side again, you see a bullish monster candle that tends to do move downward. Now price got here, rejected, pulled down. There is the sellers entered. Then what happened? Market begin to bounce because of this is a long monster candle wicks. The market find it difficult to break. We call it resistance area. So when you see such trade, it's either you don't enter the trade and wait for markets to to take its relaxation. Because this thing can also happen. It usually happen on fundamentals, right? What I mean by fundamentals is news. When the news comes in, like CPI, Customer Price Index, or NFP, non-farm payroll, or any kind of news you can see. You can get news link from maybe investing.com, Forex Factory, and other things, right? So this is it about monster candle wicks. It will help you when you see shorting in the market. You can be able to just relax and say, no, I don't want to pick a trade. But if you know and understand how the continuous candle usually come in, you can be able to pick a trade. But if you want to scalp this kind of thing, you can be able to do that on the lower time frame, dictating your order blocks, and know when the market tends to retest and push forward. That is that about monster candle wicks, right? Thank you guys, and God bless you. Wait out for next lecture. Bye for now.